With so much information out in the market, so many banks and lenders, I'm sure if you're a veteran, it's hard to know who to believe and what information that you're seeing is correct and wrong. Who's trying to sell you and who has your best interest in mind? Hi everyone, I'm Megan Marsh, owner of Keystone Alliance Mortgage, a mortgage brokerage based in Pennsylvania. In today's video, we're going to help you walk through and understand what the VA loan program does for you as a veteran. We will walk through when and why VA loans were created. I'll cover what you need to qualify, what credit score and down payment is required, and we will also go over some of the little known tips and tricks about VA loans that you can use in your favor when putting an offer in. The goal is for you to walk away with some great guidance if you're planning on purchasing and are trying to figure out if using your VA benefits is right for you. But before I dig into the details, I want to ask you a favor. If you're new to our channel, make sure you hit the subscribe button and also hit the bell. We are creating videos every week to make you a more educated and savvy homebuyer, homeowner, and real estate investor. And if you have a question as I go through this information, please leave a comment below because we will make sure we go back later and get you that answer. So why would you want to use a VA loan? Let's first go back to when and why VA loans were created for those Americans who bravely decided to defend our country back during World War II. So the VA Home Loan Program was created in 1944 as part of the GI Bill. And it was during President Roosevelt's time period, and he wanted to level the playing field for all of those Americans who served our country during World War II. And they were unable to purchase a home and save money while they were overseas fighting. The government came up with two solutions: to either provide cash down payments to veterans or to guarantee veterans loans. And they ended up deciding to guarantee veterans loans instead of providing a cash bonus because providing cash was viewed as a short-term solution versus the guarantee, which made banks feel good and would hopefully lead to more lending going forward. Because by guaranteeing the loans, the government is financially pledging to repay the loan if it ever goes into default. And what this did was it created this environment where banks wanted to give veterans loans because they had this extra protection. So things have changed, and I want to just tell you what some of these changes are because they affect the VA loan that you have access to today. So since 1945, the VA loan program had all of these changes, all of which were aimed at helping you as a veteran become a homeowner by making the loans more available, eliminating down payments, and just protecting you from excessive charges. Because one of the biggest downfalls of the original VA loan was that it was a requirement that you use the VA benefits within 2 years of your service. Then they changed it to 10 years that you could use it in, and eventually it was eliminated in 1970. President Nixon signed a landmark legislation that eliminated any kind of expiration time period that you could use your VA benefits. And what this did is it enabled millions of veterans who had previously had expired loan programs that they couldn't use within the 2 and 10 years, they were now able to use the VA benefits. And these same laws also allowed you to refinance at lower interest rates, pull equity and cash out of your home for home improvements or paying for your kids' college education. And each decade, it's brought further changes to legislation and the VA home loan program, and it's all aimed at serving you, servicemen and women who have had our country in the forefront of your priorities. Some of the changes and benefits that have been added to the program, just as an example, are the service-connected disability exemption from a funding fee, which we'll dig into here a little bit later, that surviving spouses can use your benefits. They increased the loan guarantee amount so you could have 2 VA loans at once. They added a streamlined refinance. They added that the reserves and National Guard after 6 years could also get VA benefits. And they incorporated an energy efficient loan, one-time restoration to allow you to keep using your benefits over and over again. And then last but not least, credit requirements. They really loosened them up so that this program was just as strong, if not stronger, than the other government loans like FHA. Due to all these changes, the VA loan, the Veterans Administration, has backed more loans in the past 5 years than they did in the entire decade before that. So here's a couple of the statistics, and this is a good one for when you're putting an offer in. So the VA guaranteed close to 610,000 mortgages in 2018. And the default ratio on VA loans is less than 2%, whereas conventional loans, it's 2.5%, and FHA is 9% default rate. So what is a VA loan today? So the VA loan, it's a mortgage loan, and it's issued by private lenders all over the country, but they're backed by the U.S. Department of Veteran Affairs. And VA loans are one of the 3 types of government-backed loans offered today, FHA and USDA loans being the other 2. And this simply means that banks assume the risk and lend their own money. When lending to a veteran, though, the Veterans Administration backs that bank. So let's take a look at some of the benefits and drawbacks of the VA loans. So one of the number 1 benefits is that there is no down payment required on a VA loan. You do not have to save up and put any cash down. Number 2 is there's no mortgage insurance whatsoever. This will save you thousands on a mortgage over a conventional or FHA loan. There's no limit on what you can borrow. So you can borrow $100,000 or you could borrow up to $450,000. There's no minimum credit score, although a lot of banks do create their own credit score minimums. Keep that in mind. There's assistance for veterans facing potential foreclosure. There's no prepayment penalties on a VA loan, and you don't have to be a first-time home buyer to use your VA benefits. There's bankruptcies and foreclosures won't disqualify you if you've waited the 1 to 2 year waiting periods that the VA allows. Those are all just some incredible benefits that other loan programs don't have. The drawbacks are, the number 1 is the funding fee. It can definitely add cost onto your loan. And I'll dig into exactly how much that adds onto your loan here a little bit later in the video. And VA loans can only be used to purchase or refinance your primary residence. So you can't use it if you want to go buy a house in, say, up in the mountains to go skiing. It has to be the home you live in. Not all property types are eligible for VA loans. And overall, there is some more expensive interest and payments when you look at no down payment and funding the funding fees. But the interest rates are very low. Who offers VA loans and who should you go to get one? This can be really confusing because where veterans look to get a VA loan has become pretty deceptive in my opinion. There's lenders out there who are naming their businesses after veterans themselves. Places like Veterans United, USAA. The truth is that these are just banks like any other bank. And they're banks like every other lending institution that's created and whose job is to make money. They do not offer anything more, and in some cases, they do have more restrictions than other lenders that we see in the broker and wholesale markets. So ultimately, it's up to you and who you feel comfortable with, and you should shop around and always get that second opinion. What is different about the VA loans compared to, let's say, conventional or FHA? Well, I had mentioned the down payment. There is a 0 down payment requirement. USDA is the only other loan that someone can even consider doing that. There's what's called residual income, in addition to having to look at your debt to income ratios. And this simply means that meeting the right debt to income ratio on a mortgage, it's not enough. The VA has this second qualification that looks at how much money that you have left over when looking at all the costs that aren't on your credit report. So they look at things like childcare expenses, utilities, and income taxes, which other loan programs don't do that. The debt to income ratio, VA allows for some of the highest debt to income ratios out there on mortgages. But the safety net is that residual income. So the two combined are what makes VA loans such a great option. There are what's called compensating factors that if your debt to income ratio is higher, the VA will say, hey, let's see what these compensating factors are, like how long you've been in your job. If your residual income calculation says that you have a lot of money left over, they like to see that. Let's say you have significant savings, even though you don't want to use it to put down, but you have been able to save quite a good amount of money. That's what a compensating factor is. And then things like excellent long-term credit is another thing that can be considered a compensating factor. Now, income qualification is a little bit on the strict side with VA loans. They want a 2-year work history in the same line of work. Therefore, as an example, if a veteran gets out of the military, let's say you're a mechanic, and you decide to go into sales, you can't get a VA mortgage until you have 2 years of history in that sales position. But if you get out as a mechanic and let's say you go and get a job as a mechanic at a car dealership, you are fine, even after a month at that job. Now, who can be put on the loan is different. Only a spouse can be put on your loan. Whereas other loans like FHA and conventional, you can put a boyfriend, a girlfriend, a fiance, a mother on a loan with you. You cannot do that with VA. There's the monthly and single premium. There's no monthly, and that does save you thousands, but there is the funding fee. And it's similar to FHA's what's called MIP premium. And what happens with this MIP or VA funding fee is there's a percentage that you get charged when you do a mortgage. And it depends on if you're a first-time home buyer or if you're buying your next consecutive VA loans. And it's for this reason, this funding fee, that veterans should look at and be shown some different options, like putting 5% down if you have it. It reduces that funding fee significantly. For a second-time user, that funding fee is 3.3% of your loan amount. So just for easy numbers, you're buying a $100,000 house, you have $3,300 that gets added. If you put 5% down, that goes down to 1.25% or $1,250. And then one of the less known benefits of VA loans is the process and ability to contest the appraisal values. So this process is called Tidewater, and the appraiser who is appraising the home you're buying or refinancing must notify both real estate agents and the lender if they don't think that the value will be able to come in at the purchase price. Then the lender can request what's called a reconsideration of value from the Veterans Administration if the agent and lenders can't help the appraiser reach that actual value. VA loans are the only loans that I've ever seen lend more than the appraised value when the Veterans Administration feels that the value is truly there. It really is a special element of a VA loan. So what about the application process and getting it? It's very similar to other types of loans. And we do have a video that walks you through all the different steps in a mortgage process that you can click on in the description below. So what kinds of VA loans are available to you? That would be your purchase. You also can do a refinance, and you can do a full-blown refinance, a cash-out refinance, or what's called an IRRRL, which is you don't need an appraisal or income documentations. There is a renovation loan that the VA offers, although there's very few lenders who offer it. And there is also an energy-efficient VA mortgage. So then you're probably wondering, how do I qualify for one of these VA loans that we just went over? So the main ways to qualify are that you must be an active duty service member or honorably discharged veteran who has served 90 consecutive days of active service during wartime or 181 days of active service during peacetime. You have to have served more than 6 years in the National Guard or the Reserve to be able to qualify. Or you are the spouse of a service member who died in the line of duty. And how you prove this is through the most normal document is your DD-214. And then we also need to pull the certificate of eligibility. These are the two documents that you need to provide, but the DD-214 is enough, and then your lender can pull your certificate of eligibility in most cases. And then one of my favorite things that I like to tell veterans about with VA loans is that you can have multiple VA loans. This is another huge misconception that veterans and even a lot of lenders and loan officers have. A veteran can buy a second home before you sell yours, or maybe you just wish to rent out your current home. You can still use your VA benefits on the next house. And it really does depend on your entitlement. You may have to put a little bit down depending on the price that you buy. There's this calculation that lenders go through to figure this out, and it has to do with what's called your basic and your bonus entitlement that's on your certificate of eligibility. And then the one sneaky tip about using a second VA loan that I just like to mention is that the purchase price has to be over $144,000. So if you go try to buy a house for $125,000, it won't work. Now let's go into what are the costs on a VA loan, because they are very similar to other loans, but there are certain ones that you can't pay for. The one I like to point out that makes the biggest difference is that funding fee. So once again, let's go through that with some easy numbers. If you're buying a house for $100,000, if you're a first-time home buyer, it's 2.3% or $2,300. If you're buying and using it a second time, it's 3.6%, which is $3,600. But if you put that 5% down, that's when it goes down to 1.25%, which is $1,250. And then all of you who are reserves or National Guard, it's 2.4% is your VA funding fee. And that rolls into your loan. You don't have to bring that money to closing. You can if you want to, but you can roll it into the loan, or you can even ask for seller's assistance, which can cover it at closing. Which that leads me into my next area, which is who pays the costs on a VA loan. So many veterans hear about how other veterans buy a home and don't need to bring a single dollar when they head into closing. And so they assume that the VA loan just structures it this way. But really, there are two main ways to do this. First, you need to make sure that you're working with a real estate agent who will help you and ask for what's called seller's assistance that you ask for in the sales agreement. And the second way that we do at Keystone is that you can ask to look at lender credits. And all that means is you bump the interest rate up a little bit and you can get credits back to cover your closing costs. And lastly, I wanted to just discuss how long it takes to close on VA loans. I've shared before that the national average is around 50 days, but our team closes VA loans in as few as 30 days. And this, like every other loan, it's a very individual answer that depends on you as a buyer, the house that you're purchasing. And overall, the VA loan is one of the best loans out there. So I wanted to thank you for tuning in today. We cannot wait to see if you have comments, questions, and feedback for us on these videos, other things that you'd like to see. And if you liked this video or learned something from it, we would love and would like us to make more. Make sure you subscribe to the channel, hit the bell so that you'll get notified each week as we release new videos and more information for you as a veteran. And remember that finding the right mortgage advisor who will guide you to your dreams and educate you is what will set you up for success in the mortgage process. Click on the link below and schedule a call with one of our mortgage experts today if you'd like to have a conversation and get you into a house.